FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, hey, we changed our scheduling of shows around a little bit, and just want to let you become aware we try not to put out any show more than 48 hours after it's been recorded. Weekends are a little bit challenging, so I'm going to try to adjust the schedule so that we don't have this problem anymore, and all of our shows are timely. And yeah, we talk about rate cuts, and then another rate cut comes after the show is broadcast or after it's recorded, but before it's broadcast. I realize that's a little disconcerting. We will work on that, and we will do the best we can to get you timely shows. We'll try not to broadcast any show. We'll try to do them all within 36 hours. That's a day and a half. Well, I've been getting on my YouTube channel a comment. Initially, I thought it was just a goof, but it just says, "Okay, Boomer." And I've gotten this from like a dozen of them, mainly on this one show that I recorded quite a while ago. And I looked it up in the Urban Dictionary, and it's basically a dismissive term like, "Okay, Boomer," like, what do you know? You don't know anything. And my response to that is, "Okay, Millennial. Okay, Zier. What do you guys know? What are you doing that's so great? Tell me how you're an authority, because I'd like to know." Yeah, I know that younger generations generally look down upon, hold older generations in contempt, and that's okay. It's a phase you're going to go through. All I can tell you is this, and this applies to other generations as well. There's a saying out there that I found to be extremely true. The older you get, the smarter your parents get. And let me clue you in. Your parents aren't getting any smarter. You're just becoming aware of things in the world that your parents told you about that you never believed, but your independent experience is verifying and validating your parents' view. So all I have to say for all of you out there, okay, Millennials, okay, Zers, one day you'll figure it out. Well, someone who has figured it out already, well, he needs no introduction, but we'll give it to him anyway. DollarCollapse.com's John Rubino. John, okay, been a little while, but things are starting to come together. We're starting to see these patterns assert themselves.
Hey, Kerry. Well, you know what? I'll take the other side of that millennial versus boomer argument. Our generation has been in charge since basically the 1980s and 1990s. And the minute we took over, debt started to soar at every level of society. So I think we bear responsibility for the situation that we're in right now. And the intergenerational financial war that's coming basically is going to be our fault. In other words, when we all retire and we go to our kids and our grandkids and say, "Hey, based on the way we set this deal up, you have to take care of us for the next 30 years because we're pretty healthy, but we retired at 65. We're going to get Social Security and Medicare, and you pay. Every time I go to the doctors, you pay for it. Every month out of your paycheck comes a check that the government is going to cut for me, and suck it up." And I think the younger generations, if they know what's good for them, will just tell us no. Mm-hmm. You know, the best thing that could happen for our financial health as a society is younger politicians coming in and cutting Social Security and Medicare really dramatically, because we cut ourselves this amazingly sweet deal while we were borrowing against our kids' futures.
Well,
and we deserve to be, we deserve a consequence for that.
I agree, but our parents really got the best deal on Social Security and Medicare because they put next to nothing in, and it wasn't unusual for them to get 10, 20-fold returns on the taxpayer dollars that they were mandatorily deducted from their paycheck because they kept increasing it for inflation and more generous benefits and expanding eligibility, all of these things, not to mention disability as well. So we don't bear sole responsibility, but we definitely bear a good measure of it for sure. So I understand if you millennials are upset. And if you Zers are really upset, but just wait till they're taking half your paycheck so they can pay us, John, all the money that we have been promised as individuals, then you're really going to be mad. But the fact is, the laws, it's just like in the state of Illinois. They keep wanting to cut back this ridiculous pension plan, and the court keeps striking it down, and it leaves Illinois no choice but to raise taxes. God forbid they should cut spending.
Well, yeah, I mean, it's really hard to cut an entitlements program of any kind once you create it, because in creating an entitlement, you create a constituency that loves that entitlement and that grows to depend on it, and that will fight to the death to keep it from being cut. So yeah, go ahead and try, if you're the mayor of a city or the governor of a state, to cut cop and firefighter and teacher pensions. Good luck with that. And so much of our society is built around things that are institutionally impossible to change, and that have this momentum where they're growing year after year after year, and the required debt to manage them grows year after year. That's basically the dollar collapse thesis, is that we will have no choice but to devalue the currency really dramatically at some point, because it's politically impossible to make the spending cuts that are necessary to bring things back into balance. So the only place for that pressure to be released is via all these fiat currencies, which will plunge in value once the amount of debt in the system becomes obviously overwhelming and obviously unmanageable. Right now, a lot of people are worried, obviously, about the amount of money that we're borrowing, but it hasn't really hit home yet. In other words, it hasn't started to destroy lives across the country. But it will. It's the nature of debt that when you reach a certain point, your life spins out of control. And I think you could make the case that, based on the numbers now, that we're not far from that. And although it doesn't seem that way right now, because stocks are at record levels,
I think
interest rates are actually going back up, which is a sign of optimism in the financial markets.
Yeah, well, one thing you raised pre-call was the collateralized loan obligation market starting to tank, market for risky corporate debt softening. And there was a story in the Wall Street Journal about people who are underwater already on their car going more underwater, financing the negative equity in their auto loan so they can get a new car because the old one's falling apart.
Yeah. So with everything seeming okay right now, the question is what will cause us to change our minds? Because something will. There's a catalyst out there for a change in market psychology, back to the realistic terror that we should be feeling based on the numbers. And there are some things under the surface. Like you said, all of a sudden, people are going more and more deeply into debt over cars, which doesn't make a lot of sense. But the Wall Street Journal has a stat where now 32% of people who trade in vehicles are underwater on the car they're trading in, which means they have to fold the part of their old loan that can't be paid off by trading in the car into their new loan. And so they end up with, a $30,000 car with a $45,000 loan attached to it. That's just stupid. I'm sorry. The Wall Street Journal article has excuses for people. The car is starting to break down, or their needs have changed, or whatever. Come on, you don't buy a new car in that kind of a circumstance. You get rid of your old car that you don't need or want anymore, and you buy a used car for the same or less money that fits your new needs. You don't go to a dealer and buy a brand new car. That's just crazy. But that's an example of how dumb we are about money right now in America.
Hey, I've bought a lot of new cars. I bought a lot of used cars, and definitely I've gotten better deals on the used cars. And it's simple. There's a couple of brands. If you're really interested in cars, go watch Scotty Kilmer's YouTube channel. His channel, he's probably the best car guy out there. He's a shade tree mechanic, but he's been a professional mechanic for 50 something years, and he tells you which brands will last the most. But you're much better off buying a gently used car, preferably not one that has been beat up by a kid, you don't want to buy like muscle cars used, because muscle cars get the stuffing beat out of them. That's the whole purpose of a muscle car. It's to do burnouts and donuts and all that kind of thing. But people, buying a new car has become like one of the quintessential emotional experiences, John, in our world today.
FSN Radio. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange, under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
Well, it's a sign that our lives are so empty that has to be the thing that makes us happy. You know, shopping therapy in general is a pathology, right? Mm-hmm. The idea that the American consumer is a good thing, that's how we identify ourselves as consumers of stuff, is just a sign of societal weakness. And the idea that a new car is this really big deal in your life is a sign that you don't have much of a life other than something like that. Now, moving on to the other thing you mentioned, the CLO market, okay, so car loans slow down the economy because if you take out a big car loan, you can't spend money on other stuff. Okay, that is pretty mathematically straightforward. CLOs are something that are a lot more obscure because what? Would you say 1% of the people could define something like that? Idea. You give them that acronym, and then anyhow, it's just basically loans to risky companies that are bundled up into bond-ish kinds of securities and then sold to mutual funds. And then you can buy into that mutual fund and you get an interest rate or interest payments based on the cash flow from those bonds. They're risky by definition. Mm-hmm. And in good times, they do well. And in bad times, they tank. They behave like stocks. You know, they go way down.
Yes.
And so the CLO market has been behaving very badly lately. Since July, the return on CLO funds has been negative. And in October, it was negative 5% for 1 month. That is a huge drop in a fixed income fund return. And the implication is that weak companies are having trouble out there that they didn't have in the previous year. In other words, they're not paying their bills and they're defaulting on their debts. And it's impacting the securities that are out there from their previous debts. That's kind of like what happened with subprime mortgages in 2006, 2007, 2008, when this kind of obscure little segment of the mortgage market started to blow up and it spread. CLOs are, in terms of size, bigger than subprime mortgages were and behaving the same way that subprime did in, say, early 2007. So it bears watching because it could be the kind of thing that spreads. We've set up the conditions in which a bad thing in one sector can spread to other sectors just because everybody's so financially fragile. So CLOs are worth watching because if that spreads from the low rent part of the corporate bond market into investment grade bonds, for instance, investment grade corporate bonds. In other words, if it goes from double B to single B or double B to triple B and upward
right,
within the structure of the bond market, it could have wider implications, and it could be the kind of thing that sets off a crisis that can metastasize. So, right now it's not really hurting anybody other than people who own CLO bond funds, but the potential is there. because
for sure.
something is going to do it. So there's a catalyst out there waiting to happen that will change everybody's mind from, hey, things are basically okay, we solved the China thing and interest rates to, my God, I'm going to lose all my money, I better sell everything. That phase change will happen in market psychology, and something will cause it.
It has to happen.
CLOs are one of the things to watch.
Yeah, the car loan, the car loan didn't used to be a bubble, but now they're as big a bubble as student loans. And let's not forget about student loans, but Bernie, Lizzie, they all have a solution, and that's just to eat the student loans, just to have the government swallow the pill and make everyone debt free. Why don't we just call it what it is, a student loan jubilee?
Well, bailing everybody in sight out is going to be one of the features of the future U.S. and really the global economy, where things start to blow up and the government has no choice but to step in and
do the
move
right thing.
that private debt onto the public balance sheet. Basically, that's what a bailout is. And student loans are, because they're politically attractive. Bailing out student loans is a politically really appealing thing for people on the left to do. That's might be a plank of the Democrat campaign in the 2020 election. This is how bad it is, because I'm basically a libertarian. I don't even believe in student loans as a concept, right?
It's the worst thing that ever happened.
Yeah, and neither of my kids have ever borrowed a penny for school, and we haven't borrowed money to put them
nor
through
my
school.
three. Yeah.
But the other day I had a talk with my younger kid. And he was saying, okay, I'm taking a year off, and I'm going to go back to U of I in next year. And I said, you know what? It might actually make sense for you to borrow money to do that, because it's completely possible that the government is going to pay off those loans for you. And if you work really hard and save up a lot of money, and you and I together just pay your tuition, what happens to us when everybody who borrowed huge amounts of money gets their student loans paid off? Is that fair to us? Maybe we should be stepping on this gravy train too. And that's a libertarian family having a conversation like this. That's how crazy the world is now, that you're even convincing people who don't believe in the concept of student debt that maybe student debt is a good idea just because of government policy. It's
perverse
the definition of moral hazard when something like that happens.
It's the perversion of incentives. Just like, look, there was somebody, I can't remember who it was, that did a whole thing on why the repo market is blowing up, and they used the example of this real estate investment company that's got $100 billion worth of, or billions of dollars, I don't remember the exact number, but billions of dollars worth of repos that they borrowed money on. And for them, they're loaning out the money at like 5%. And when it went up to 10%, that was a bad thing. But they knew that the Fed was going to bail out the repo market. So, yeah, they had a couple of hairy days, but now it's back down to 2%. They're making their 3% spread. They look like geniuses, and that's just the way it worked. One thing a guy had on from the collegeinvestor.com, his name's Robert Farrington. He gave a very good guideline for borrowing. Do not borrow more than 1 year's worth of future income to finance your college education. And then I was talking to you about that website, the collegescorecard.ed.gov, and that tells you what you're going to make graduating from these various colleges, some of which is pathetic. You're better off going to welding school, or you're better off cleaning houses. Honestly, go become a realtor, anything, but waste money on these. A lot of them are for-profit colleges that really give you nothing in return. It's shocking, John.
Yeah. College isn't for everybody. And see, one of the things entitlement programs do is that it kind of is the differentiation between behaviors in the group that's getting the entitlement. Everybody just gets it based on some random criteria like age or income level or something like that. So the government has started basically paying anybody to go to any college. So you've got all these people who shouldn't be in college in the first place. They should be learning to be electricians or plumbers, where you get steady work for good money in a market that desperately needs your services. And they go and take, a media degree or a history degree from a really low rated college instead with government money. Bad idea. Because they can. They wouldn't be able to do that without student loans, but they do it. And so we create all these financially debilitated people who wouldn't normally be like that, and they're out in the world. Nobody's willing to pay them anything for their college degree, but yet they've got $72,000 of college loans to pay off. And now the next stage of that, which is an inevitable stage with these random indiscriminate entitlement programs, is that there's a political issue now. Yeah, where you can get elected by promising to take care of all that debt for people, and
political payoff.
And if you're going to take care of everybody's student loans, you're the kind of person who's going to create a bunch of other random indiscriminate entitlement programs to go along with the one that you're bailing out. And so you get a system that just barrels towards the cliff financially, because there's no incentive to control anything now with a fiat currency and an unlimited printing press, and basically government's able to borrow unlimited amounts of money with no consequence. There's no political consequence to running deficits and starting new entitlement programs that you can't pay for without borrowing money. That is all upside and no downside in the political system right now. And that's the end stage of a formerly capitalist system that becomes corrupted by the idea, like that old saying goes, democracy only survives until people figure out that they can vote themselves free money from the government.
Yeah.
And we're in that stage now where it's all like, who can give you more free stuff? Okay, I'll vote for Bernie, or I'll vote for Elizabeth, or I'll vote for Trump to get tax cuts. Everybody's just basically trying to bribe us into voting for them. And that's the final stage before the collapse.
Well, we're getting there real quick. Obviously, things have just deteriorated like we never imagined possible. And you wonder, there's only so much force. You pull a rubber band and you pull it and you pull it and you pull it, and eventually it's going to snap and really hurt when it hits your hand. And that's where we're at now. That band is just waiting to snap. And you also got a lot of birds with sharp beaks who want to cut that band, and they're flying around it. And how much longer can it continue? We don't know that, but it sure does look like the end times are upon us for the economic system that we've all known and loved for so many years, that has given us so much and asked for so little in return. And that's the problem. The less it asks for, the more precarious it gets. Anyway, make sure you take a look at John's site, dollarcollapse.com, our site, financialsurvivalnetwork.com. Sign up for our newsletters. John, we're going to catch up with you next week, but it sure as heck is getting interesting. And to all you millennials out there, okay millennials, and okay Zers, and okay boomers.
Thanks, Gary. Talk to you next week.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.